Welcome to the Valareso Capital community, where we discuss the stock market and trading strategies to become a consistently profitable trader and investor. Hey traders, welcome back to Valareso Capital. On today's video, we're going to go through the weekly watch list and also we're going to do a quick market update. Remember guys that this video is for informational purposes only. It's just based on my personal opinion and it's not financial advice. Remember guys to subscribe, that way you can keep updated with the new upcoming videos in the channel. So let's start here with the video. Let me grab my drawing tools and let me make myself a little bit smaller. So the first chart that I want to analyze with you guys is going to be the S&P 500 mini futures contracts. And the expectation last week, remember guys that we were expecting a little bit more of a pullback in the market. And it seemed that we were going to get that on Thursday when we had this reversal candle right here. And then of course we came into Friday and we had this very big engulfing candle that you're seeing right here in the chart. So let me just take the quant pivots out of the chart. So you can see right here that we had this very strong engulfing candle, basically engulfing the entire body of this candle. However, we did not close above the high that we had on Thursday. Now, what is going to be the expectation for next week? It's really important for us to understand that we have to be very aligned with the seasonality that is coming into the market. I know that seasonality at the end does not play such a huge weight, especially if you're a swing trader and especially if you're super skilled, right? Because at the end, the market rewards you based on your skill and not exactly on the seasonality. Because if you're good identifying setups and executing those setups, then you're going to be fine. However, we also want to think in probabilities. And if you go back to analyzing the probability of having a month higher on August and September, then that probability is going to drop below 50%. If you go back to July, I think the probability was 100%. So we have to understand that as well, and I think is important. Now let's go into the charts and let's focus on the price action because it's the most important thing. What I want to show you here, guys, is first of all, we don't have a lot of information right here in the SPY, to be honest. The only thing that we're looking at is a very strong candle, but we're also looking at a very bearish candle. So we have two different type of candles here. So even though we had a strong day on Friday, we do have to take into consideration that this is a very important candle. And if we jump pretty quickly into the SPX, you're going to be able to see that a little bit more clearly. So right here, you can see the reversal candle that we had on Thursday. You can see that it was a huge candle, the one that we had on Friday. And we have not had any similar price action during the entire move to the upside that started all the way back here since we broke out from this base on May. So you can see right here that we had this really strong move. We're starting to get pretty extended from that base, and then we had this reversal candle right here. In my experience, it's very important to pay attention to these reversal candles, and the reason being is that when you start to get this kind of price action, there's a different tone in the market. There's a different reading in the price action, and there's a different psychology that is happening behind the minds of investors and traders alike. So we have to take into consideration that we might see a little bit of upside. We do have an on-field gap on the SPX right here at 4,630, but I think it's going to be really important to watch this high right here. If we are unable to clear that high, then probably we're not going to see any more upside, and we're probably going to get that pullback that we have been anticipating for a while. But I think that the easiest way to trade this guy is looking at this inside day that we had on Friday. If price happens to break above that inside day, then we're probably going to see a little bit of upside. If price happens to break below the inside day, then we're probably going to see a pullback. So I think that we have a very clear path of what we should expect. Basically, you can set alarms either above this inside day that we had on Friday and set some alerts below that inside day that we had on Friday. We have to be sure that we don't get any fake outs, especially in the first 30 minutes of the trading session. So it's very important to to analyze this and be calm, because anything can happen. Remember that we also trade in an algo driven market, meaning that we tend to see a lot of liquidity sweeps during the trading day. So that's very important to understand. So what is the expectation? The expectation for next week is that basically anything can happen. And I think that the best advice that I can give you is have alerts above the inside, above the high of the inside candle, and have some alerts below the low of the inside candle. In terms of momentum continues to be very positive. Momentum continues to be very bullish. I don't see any reason why this can go higher, and I don't see any reasons that if we happen to see a pullback, I don't see any reason why this 21 EMA wave should not hold, because we have not seen any change in the structure of momentum, and we haven't seen any major break in the structure of the price. However, I do want to take a look at what is happening with the fangs. So I think that's going to be the most important thing that we're going to be taking a look at here in this weekly market update. So let me just hide these alerts for a quick second. And you can see right here that we have the Fang Index. So these are basically the mega caps. So we have Apple, we have Tesla, we have Nvidia, we have Meta, we have Google, we have Apple, we have Amazon, and we have Netflix. I think that they also take into consideration AMD. I'm not sure about that. But what we're starting to see here in the Fang Index, in my opinion, is a little bit of a short-term topping pattern. Why am I saying this? First of all, we had this huge breaking candle that we had a couple of weeks ago. We had this huge bearish candle. We have not seen a candle like this one. So I think it's important to pay attention, because that's a change in the psychology of the price action. And we also see that the momentum structure has already changed right here in the Fang Index. So I think it's very important to take that in consideration. You have seen that during the entire move to the upside, we have not seen any major breaks in the momentum. We saw a little bit here, but of course, remember that this is a MACD, so we tend to see those pullbacks, then we tend to see the rebound. But I think it's very important to take a look at the MACD here, because when the MACD histogram is trading below basically below the midline, and we happen to see a bounce and we don't see any kind of movement above that zero line, then we tend to see a fake out and then a pullback. I have seen that setup many times. Especially, we tend to see that failed move finding resistance right here at the 0618 Fibonacci retracement zone, which is basically measured from this high here to this low right here. So when we tend to see that quick snapback, right? We had the pullback to the 21, then we had that move basically right into that Fibonacci resistance zone, and we don't see any considerable move to the upside in the MACD histogram, we have to pay attention, because we tend to see fake outs, right? We tend to see a little bit of buyers buying resistance, and then we tend to see that pullback. And also it's very important to see that the other indicator that I have for momentum has already break momentum, and we're probably gonna see a little bit more chop. My expectation right here in the Fangs is that we're gonna test this rising 50 daily moving average at some point next week. So that's going to be the expectation for the Fangs, and we have to understand that since we are trading also in a market that is heavily weighted, is heavily weighted by the mega caps, the reality is that the QQQs and the SPX, they're not going to go anywhere without Apple, without Amazon, without Netflix, without Tesla, without Google, without Meta. The probability that they're going to continue to move higher, given the weightings, even though we had the rebalancing, the probability that they're going to continue to move to the upside is actually pretty low. So these stocks, like it or not, these stocks are really important for the market. And what I'm starting to see in those stocks, and we're going to take a look at that pretty quickly. Let's take a look at Tesla here. Tesla right here is a short in my book. You can see right here when we had this strong move to the upside, right, we were trading above the wave. You can see that I had my blue candles and even my black candles that signal when we started to lose a little bit of momentum, but we continue to be above the wave. And you can see both the momentum in the MACD was pretty bullish, and also in my other indicator, the momentum was also pretty bullish, which is the trend oscillator, right? So momentum was pretty bullish and price was trending above the 21 moving average wave. And now we have a breaking structure in price and in momentum. So that's very, very important to understand. You can see right here that Tesla broke below the 21 EMA wave, which is a change in price structure. And you can see that we have a change in momentum. And you can see that the MACD has not recovered at all above that histogram. So that's a huge divergence. So based on what I'm seeing in price, based on what I'm seeing in momentum, I think that the path of least resistance for Tesla, unless we reclaim this high right here, is gonna be a move to the downside and find perhaps some buyers at the 50 daily moving average. So this one right here is a short. Right, so Tesla is a short, and I think Netflix and Microsoft are also looking like shorts. You can see right here Tesla, Netflix. You can see that we were trending above the 21 EMA wave. You can see that momentum was pretty bullish, and now momentum is breaking to the downside. You can see that right here in this indicator. You can see also that the MACD has not recovered, and you can see that we're trading below the 21 EMA wave. If by any chance this 50 daily moving average fails to hold, then we can see Netflix going for this gap close right here. So don't be surprised if that happens, because price structure is already changing. So that's very important to understand. And then we can see something very similar in Microsoft. You can see right here that Microsoft has also break below the 21 EMA wave. You can see that that did not happen here. Even in these pullbacks, you can see that we had hammer candles that were closing above the low of the 21 EMA wave, so we did not break that level. And you can see right now that momentum is starting to look pretty bearish, and you can see here that Microsoft is already trading below the wave. So I wouldn't be surprised if Microsoft bounces here into the wave and then fails to test demand right here and the next level of volume. And you can also see if you tend to use the anchor volume, you can see right here that we had a lot of volume, and then the next ledge of volume comes somewhere around here, somewhere around 320, perhaps 315 in Microsoft. And then I do think that we have Amazon reporting next week, right? You can see that Amazon looks pretty similar, right? You can see right here that Amazon starting to trade below that moving average in the momentum. You can see also that right here in the MACD, and we're starting to see that change of structure. Right? You can see that we had a deeper than expected pullback that trades below the wave, and now we're rallying into Fibonacci resistance, which is measured from this high right here to this low right here. So don't be surprised if we see a little bit of a pullback in Amazon, perhaps before earnings, and then Apple is going to be the big one next week since we are reporting. And you can see that Apple is actually looking bullish. You can see that we had a base here, momentum continues to be bullish, MACD is rising, which is also great. And we also have a squeeze. So basically anything can happen here with Apple. We perhaps see a break and a continuation, or perhaps we see a pullback. Is mostly going to be driven by earnings. So basically the expectation for next week, guys, is that the market overall continues to be in an uptrend, especially if you're looking at the SPX. However, we are starting to see red flags in the mega caps, and not just based on the Fang Index, but if you start looking at those individual stocks one by one, you are starting to see that we are already seeing some changes in the price structure. And I think that's really important to take into consideration, given that we trade in a market that is heavily weighted towards these mega caps. So that's gonna be it for the video, guys. Thank you so much for watching, and I will see you on future videos. Take care and bye bye.